Good morning, everybody, and thank you for attending the meeting today. If you are watching this through video after the fact, uh, my name is Mike Cagle. I'm the Deputy Budget Officer for Greene County, and this is the second in the Commission Information Series, Paint by Numbers. The topic for today is the property tax timeline, determining the numbers from budget to actual. First of all, it goes without saying that property tax revenue is vital to the county. It's a significant source of revenue for many entities throughout the county. School districts, fire protection districts, and cities all set their own levy rates. The library, OTC, the senior fund, Abilities First, and even the state of Missouri gets a small portion of the property taxes collected in the county. And then, of course, the county gets its share, which is split evenly between general revenue and road and bridge. About 85 to 90% of all the property taxes that are collected go to city and school districts and fire protection districts, if applicable. Real property taxes are distributed based on the physical location of the property, while personal property taxes are distributed based on who owns the property and their place of residence. Only about 4 to 4.5% of all the property taxes that are collected go to Greene County. And as I said, this is split evenly between general revenue and road and bridge. Even though this is a low percentage of the overall tax, it's still significant to both county operations and road and bridge operations. Over the preceding 5 years, this revenue has averaged about $8.2 million for each fund. And this is increasing because just last year, property tax revenue was $9.5 million for each fund. This made up nearly 10% of the total GR revenue and 22% of road and bridges revenue. The figures above, these percentages include taxes for real property, personal property, railroad and utilities, and the commercial surtax. There are other fees and revenues that come in that are related to property taxes, and one of the big ones is the collector's commission. The collector's office is allowed to retain a 1% commission on all property tax collections, regardless of where that money is eventually going. This 1% commission only appears in general revenue. No portion of this is actually shared with Road and Bridge. The 5-year average of this revenue has been $3.8 million, and just last year it totaled $4.3 million. So it is very significant. In addition, the collector is allowed to collect late fees as penalties for paying taxes late, and this made up over $500,000 in 2024 alone. So if you look at property taxes and the commission for the collector and late fees, this total made up over 14% of all GR revenues for 2024. And something important to note here as well is that the collector's expenditure budget and general revenue for last year was only $867,000. He brings in far more money than he actually uses, so his percent commission is a significant source of revenue for the entire county. Meanwhile, the assessor's office also receives funding. The assessor's office receives a special 1/8% of all property taxes collected. This has averaged $1.9 million over the past 3 years, and last year it surpassed $2 million. The state of Missouri also pays an annual allotment to the assessor's office fund according to the number of land parcels, and this revenue has been just over $400,000 per year. There are also other revenues collected by the assessor's office, which include occupancy fees and technology fees. Occupancy fees occur when a homeowner has purchased a house which is new. This is what you would call a fee for the portion of the year in which they lived in the house, hence the name occupancy fee. The property tax process is definitely a group effort spanning many departments. Several offices and departments handle different parts of the process. All of these responsibilities are required by law and are specifically defined in the revised statutes of Missouri. The tax timeline is always shifting between departments as one set of tasks ends and another set begins. When you take the financial reporting aspect into account, the tax process takes over a year and a half from beginning to end to complete. So you'll have one department working on one tax year while another department may be working on a different tax year. And we'll see how that works shortly. As I said, certain offices have explicit statutory requirements. These obviously don't give them all, but the assessor's office, of course, determines the valuation of all real and personal property throughout the county. The county clerk's office maintains the annual tax levy amounts, calculates the amount for the county, and collects these, gathers them, and puts them on their website so you can see several years there. The collector's office distributes tax bills to all taxpayers in the county and receives all incoming payments. Each office is busy all year, but as they could all attest, some times of the year are definitely busier than others. The financial part of the property tax process isn't really a public-facing task. It's more of a behind-the-scenes effort. The treasurer office has responsibility for posting the receipts coming in from the collector. The treasurer's office also handles special journal entries at the end of each year, which ensure that revenues collected for a specific tax year are reported on the books in the correct year. At the opposite end of that, at the beginning of the tax year, the budget department is responsible for estimating future property tax revenue, which ultimately impacts the funding available for commission to make their budget decisions in December. What the next few slides are going to try to demonstrate is a very condensed timeline of departmental activities related to property taxes through all of these departments: the assessor, the county clerk, the collector, the treasurer, and budget and commission, along with their approximate dates of completion. These are definitely not set in stone, these dates, but they are approximate in order to give a timeline. The tax year we're going to look at in question is going to be the 2025 tax year from beginning to end, which, as I said before, covers a 20-month time span. And you'll see that the 2025 tax process activities will be highlighted in green. Other years will be highlighted in different colors, and this is to emphasize how one tax year overlaps from one year to another and from department to department. So things began pretty early in August while we begin the budgeting process by passing out budget worksheets and beginning to estimate what property tax revenues will be in 2025. The assessors began reviewing property values throughout the county. What we have here in orange is our tasks that occur for the 2024 tax year, and I will focus a bit on each one of these, but for when they come up in 2025. These are simply here to show that while some departments are starting 2025, other departments are still in the thick of working on 2024, which includes the county clerk, and will be including the collector here in a few short months. Taxes will be collected and posted. The next highlight for us is that a commission will approve the budget in January of 2025, and that budget will include our estimate of what the 2025 tax revenues will be for property. Shortly after that, the assessment lists for personal property are due from the public to the assessor's office by March 1st, and this is for property owned as of January 1st. About the same time, the assessor will begin mailing property value change notices to taxpayers. And even though we're in the heart of 2025 tax process, we have the treasurer finally able to wrap up the 2024 tax year, and we'll focus, like I said, on this as it occurs for the tax year 2025. Meanwhile, through the spring, the assessor is taking calls from the public who may have questions about what their valuations are and may want to dispute those. By July 1st, the assessor's 2025 assessment book is submitted to the commission and the county clerk. And from this, the county clerk prepares what's called a Form 11, which summarizes the county property value totals. And this goes to the state tax commission. Meanwhile, the public, taxpayers who have received notices and want to dispute their valuations have until the second Monday in January to apply to have a hearing before the Board of Equalization, of which the county clerk is the non-voting secretary. So the county clerk and the assessor's office are both involved with this process with the Board of Equalization. Those hearings are heard and decided through the end of July, which times very well with what happens, or what has happened just a few weeks ago. The 2026 tax year process began, where we began budgeting and determining estimations of tax revenues, and the assessor has once again begun reviewing property, and this will all apply to what happens in the tax year for 2026. Meanwhile, after the Board of Equalization has made all of its decisions, it will submit Form 11A to the State Tax Commission, and this is an adjusted Form 11, which includes all the decisions that were made by the Board of Equalization, whether it ruled in favor of a taxpayer, and basically includes all those adjusted tax or adjusted assessment values. While this is going on, school districts and other political subdivisions are submitting their levy rates to the county clerk. He collects those and has to know all of them in order to be able to do what he does very shortly in this timeline. The county clerk is responsible for calculating what the county property tax levy will be. There is a special commission hearing or a commission briefing where he will present this levy to the commission for certification and approval. It's about the middle of September, and it also involves posting a public notice so that the public is aware that this is happening and what the rate will be. After this is done, the county clerk creates and delivers the 2025 tax book to the collector. And it is from this that Alan and his people will begin generating the 2025 statements that are distributed to all the taxpayers. The statute requires that they be in taxpayer hands at least 30 days prior to the delinquency date, but the collector's office is very good about getting these out well in advance. They are in taxpayer hands usually in November, and taxes begin to be collected at that point. We will have taxes that are collected in November, and they will post to the GL in December. And that will continue on for the whole tax cycle. Meanwhile, the county clerk is still really not done with the tax year. He has to submit a final Form 11A to the State Tax Commission, and this includes any data adjusted by court orders, which would have come from taxpayers who were not satisfied with the Board of Equalization's decision and decided to exercise the option to appeal that even further. There could be further adjustments, and the county clerk is responsible for reporting those. In addition, the county clerk each year submits Forms 1309 and 1310 to the Missouri Department of Revenue. These are land and property aggregate abstracts. What these include are a breakdown of real property by type as well as personal property, the assessed valuations. It also includes the taxes by category. 1309 is for normal real and personal property, and 1310 applies specifically to railroads and utilities. But for some of us, the 2026 tax year is underway. Commission will approve that budget in January and will have made their decisions based on what we predict that the coming year's tax revenue will be. The assessor's office is also working as well. They're receiving the assessment lists from the public. Again, they're going to be contacting taxpayers as needed for property value change notices, and the public will be getting back in touch with them. And then finally, to close out the tax process, the treasurer will write a special year-end entry about the end of March to make sure that the taxes posted to the GL in 26, which are actually 2025 taxes, report correctly on 2025's books. He will then also create a special reversing entry to offset the prior year's accrual, which was already reported on 2024's books. Some detail involving that entry will follow shortly. So the summary of this is that we begin in August 2024 along with the assessor's office. We estimate what the coming year's taxes will be while the assessor's office begins the valuation process. The county clerk and the commission receive the assessment book by July. In September, the county clerk will have calculated the tax levy and will have presented it to commission, who will certify it. The collector's office will use the data from the tax book to create statements and issue them in November and begin receiving payments. And historical experience says that about 95% of the total revenues for 2025 will be posted by February 2026. They will be collected in November, December, and January, and they will post in the following months of December, January, and February. And then in March, the treasurer will take care of a special year-end entry to accrue for the 2025 revenues that were posted in 2026 in order to report property tax revenue correctly on the financial books. After this accrual, finally, we can compare budget to actual to determine whether the year was a financially successful one. And by successful, we don't mean whether the county turned a profit, because we're not a for-profit going concern. Successful means that actual revenue was very close to what was predicted in the budget. Just a few things to point out. If you're watching this and you're in one of these departments, you know that we did not cover a lot of the things that you do each year for the tax process. This timeline is only a very broad summary. All the above offices handle many more duties than those listed here in order to make each tax year run smoothly. Other offices could provide, and have done so. I have listened and watched them, more comprehensive presentations of all the duties for which they are responsible. This is going to focus on the financial side. At the beginning of the tax process, the budget department receives data from the county clerk's office in August. And this is paperwork that they generate or that comes to them in the form of Form 11A, which goes to the State Tax Commission, levy calculations, and et cetera, because we want to understand as early as possible how the current tax year is shaping up with regards to valuations and levies, so we can get a handle on what the current year's tax revenue is going to be. What we do is then we then factor in estimations of several potential change factors to predict what next year's revenue is going to be. Some of these factors include any potential increase in the overall assessed property valuations for the county. We look at this as a broad brushstroke. Historically, how have property values changed from one year to the next? Another factor to look at is whether we're going from an odd year to an even year, or an even year to an odd year, because sometimes when things are fully reassessed, there can be a more significant change than if it's just a general smaller increase. We also have to look at the increase in sales tax revenue of the current year over the prior year, and the potential increase in sales tax revenue of next year over the current year. Both of these items are a result of the application of the Hancock Amendment, which was some special legislation passed in 1980 by Mel Hancock. It, in the most general terms possible, it creates a limiting factor on how much revenue can be collected through taxes. So As a general rule, you can think of it this way. If we have a year where we collect a whole lot of sales taxes, much more than what we may have collected the year before, there's a very good chance that in the next year, the tax levy may decrease because we cannot collect as much property tax revenue without running into some situations. On the other hand, if sales tax revenue declines significantly, it could mean a potential increase in the property tax levy. There's also a factor of the change in the consumer price index. This comes into play in the calculation of the tax levy from the county clerk's office. As we've stated several times, overall financial performance of property tax revenue isn't known until at least a year and a half after the revenue is initially budgeted, and it all boils down to timing. By statute, we have to create and have in place the budget by January 10th for this particular coming year of 2026, whereas the county clerk isn't going to know what the tax levy is going to be until September of 2026. So we have to make some presumptions, some assumptions, and some estimates well ahead of time. We have revenue postings that carry over from one calendar or fiscal year into the next. And because of this, the treasurer's office has to generate special year-end accrual entries in order to ensure that those revenues are reported in the correct year. That's when we can see how budget versus actual truly compares. Justin doesn't brag on himself very often, but I'm going to brag on him just a little bit with the set of next slides. This is a peek behind the accounting curtain. The year-end accrual, which is created by Justin in the treasurer's office to ensure correct tax year reporting, is definitely handled out of the public eye. One might call it unglamorous. However, it is an extremely important part of the financial reporting component of property taxes. And what these slides are going to attempt to do is to help explain the accounting behind the creation of this accrual entry step by step. We don't have to have accounting experience to understand this, and hopefully baby steps will help you develop an appreciation for what Justin has to do. Here we go. Tax statements are distributed in November of the tax year after assessments, determination of tax levies, and calculation of taxes owed. What we're going to do is we're going to add to this graphic piece by piece, like so. The collector will begin receiving tax payments in November, and he continues collecting throughout the year. About 95% of the property taxes for a given year will be collected from November through January of the following year. So collected in November, December, and January. And because of how we handle the postings of those, the collections for a given month post in the next calendar month on the GL. So November posts in December, December and January, January and February. So you can see that what we've created is an offset between the years that has to be accounted for to some extent. This repeats every year. This is not anything new. It is expected. It repeats annually. The first 2 months of collections posted to the GL in a given year always actually represent taxes that were billed for the prior calendar year. So what the treasurer will do is he will create an entry to accrue the January and February postings so that they appear as revenues in the correct year for the financial statements. This entry will be posted to a special accounting period within the general ledger so that it doesn't intermingle with the normal posting entries, which aren't moved. He does not move the actual posting amounts. Those are in place. These amounts go to a special period and a special type of entry to make sure that the revenues show up. And this is kind of an example of what is called in accounting the revenue matching principle. We want 2025 or 2024 taxes to appear in the 2024 fiscal year. So that's why this entry is done. And no surprise, this entry is also done annually because of the overlap that happens every year. Now, What's going to happen when he does this in March of 2026 for our current fiscal year is we're going to have too much taxes going on in fiscal year 25. If you see in the box represented by fiscal year 2025, once he does the coming accrual, we're going to have 14 months worth of taxes. And that's because what was posted in January and February from the collector's office is still there on the books. So at the same time that he does the accrual entry for 1 year, he is going to create a second journal entry, which basically reverses the prior year's accrual. This entry cancels the amounts that were posted in January and February of 2025. And so what we're left with when you look in the fiscal year 2025 box is 12 months worth of revenues. And the three highlighted months, December, January, and February, those are the months that they were posted. That does represent 95% of the 2025 taxes that will be collected. And it also gets rid of the amounts that were posted in January and February, which is really what we wanted because we intentionally moved them or moved those numbers so that they would report in 2024. And as no surprise, it begins to look like a dance chart. This process is cyclical. The treasurer reports this every year, the accrual for 1 year and then the reversal for the prior year. The net effect of this process ensures that we get the taxes reported into the correct accounting books each year. Now, since January and February postings we know will ultimately be canceled by a reversing entry in March of next year, we do not any longer include those in our weekly monitoring numbers. And the reason for that is if there is some unexpected major change in the amount of taxes, property taxes collected between 1 year and the next, and it would be unpredicted because normally it's about the same amount. But otherwise, if something were to happen, then reporting them now could give a false impression of performance. So we simply do not include those and make sure that we make a note and remind you that those numbers will come into the system and onto 2025 books next year when Justin does his entry. This cycle continues indefinitely. It repeats year after year. As you can see, it involves a significant number of departments and people performing a wide variety of duties, and it overlaps on itself at different times each year. Just when you think it's all done, there is probably still a department out there that's still working on the current year or still working on last year or already at work on next year. It's a very, very important process, but it's also complex. And to that end, I'd like to give a big thank you to all the staff in all of those offices, the assessor's office, the county clerk's office, the collector's office, and the treasurer's office for the work you do to make each year successful. And by the way, tax statements will be on the way soon. Don't forget to pay your taxes by December 31st.
Thanks, Mike. That was wonderful. It's a very complicated process, and I think you broke it down into really digestible parts. As a part of these informational series meetings, we always want to touch upon our current budget and how we're doing the budget. And so to look at general revenue, the current year cash position from revenues, expenditures, and transfers is a use of cash of $25,139,293. This is $2,014,244 more than what is budgeted through July. Revenues, net of transfers, are $1,575,592 lower than budget. This is primarily from $1,651,000 in transfers happening quicker than last year, but happening within budget. $1,241,000 in sale of property happening slower than anticipated, but we believe that will also happen and maybe at a greater extent by the end of the year. Sales tax is $1,199,000 slower than last year's pace. And Department of Corrections boarding revenue is $649,000 slower than last year's pace. When we look at expenditures are $438,653 more than budget through July. Unbudgeted ARPA expenditures for Family Courts HVAC and Silver Springs Park are $3,143,000 over, but should be reimbursed. And actually, we have partial reimbursements for that coming before Commission in Commission's briefing today. Jail overtime is $1,079,000 over budget, but should be offset by federal boarding revenue in excess of budget. And so those are our revenues and our expenditures. We expect the revenues to correct, except for sales tax and DOC boarding being slower. And the expenditures, we believe those will be covered. That takes us to our next fund, which is Road and Bridge. And with Road and Bridge, the current year cash position is $4,247,197 better than budget to date. Our next fund is the Assessment Fund, and the current year cash position is $154,000, $360 better than budget to date. And our final fund, Law Enforcement Sales Tax, the current year cash position is $133,504 better than budget to date. So that sums up a quick review of our major funds. And I would like to thank everybody for attending the informational series today. We will be working with Robert Jelly in the Public Information Office to take this recorded video and post it on the county's YouTube page. Again, we will have links to that YouTube video on the budget's website, and we hope to have that up within a day. So if you found any of the information presented today interesting or useful, please let your fellow employees know that it is available for review on the budget's website for a link, and then it will be posted on the county's YouTube page. So thank you all for attending today. Have a great day, and we'll see you next time.